for part 2 here. I just want to go over to this SPY chart. SPY 5-minute. I told you there was negative. I showed a negative divergence on the 15-minute. You could also see it clearly on the 5-minute. You see the higher highs. The same rising wedge comes up, and you have the MACD over here very high. You have it here, two more lower highs, and over here another 2 lower highs. And you see stochastic is overbought. So this is going to roll over at some point. Probably the odds say it's going to roll over, and we're going to correct this back to this 106 area at the very least. The volume was very weak from this from the bounce at 2 o'clock Thursday. As you see here, 2 o'clock Thursday, we bounced. Looked like we were going to collapse, and then we bounced. Got short covering the last hour, and then chopped fast Friday, and then end of day short covering again to close near that level. Another chart that I'm going to look at is the VIX. This is a very telling chart. This made me some money before. I caught the last top. Right here, you had the falling wedge on the hourly, and you had to bounce back up to this level right here. You sold off from that level. Another falling wedge, higher high. I mean a higher low over here. You have positive divergence on the MACD. You have the histogram has been ticking up for a few days now on the hourly. Very positive, but price action is not following yet. But the volume's been very light. Keep in mind. Remember on the SPY. So that's something to keep in mind here. RSI, you got positive divergence from the other prior low. Positive divergence on the MACD going back from when the VIX was at 30. So it's telling you that this market, the market looks like it's about conked out on the long side. It looks like it was another dead cat bounce. We're pulling in, making a pattern here, and if we break the 37 area, I mean, you have a target of 50 on the VIX, which will give us a new high for the move. So that's what you need if you want to see the VIX. If you want to see this market really sell off into the 875 area. On the that wasn't the chart I want to look at yet. On the chart here too, for the for the VIX, there is a falling wedge here too. I did not annotate this chart. You're pulling back to the 100-day, where before the falling wedge ended, and we had a nice sell-off from 113 to 101 and change. So now you're falling again, except you're falling to a higher level. The market's at a lower high in the 107s, and the stochastic is in the 20s, 20 and 30. So the only thing you don't have the histogram ticking up yet, but you have Friday's candle was actually, it's a good candle. It was inside the action of Thursdays. So the VIX was down, but it was still inside of Thursdays. So that's something to worry about if you're long. That means that the up move is losing strength. You look at the U.S. dollar daily. We've been hugging this down channel line. Also, another thing, that the histogram has been ticking up. You have a very oversold stochastic with a 6 and 7 rating, and I'm thinking it's a matter of time before this market busts to the upside too. I look at the UUP for hourly action. It's been putting in some nice positive divergences here. As you see here on the RSI, you've had pretty much a double bottom right there. The MACD has been rising for quite a while. You put in like a double bottom there, which measures to basically saying that the market should go back to the 25-10 area, and we've been at 24.40. If it gets to that 25-10 area, the market's gonna be back in free fall type action. So that's kind of what I'm looking for to happen. I'm looking for the euro to top soon. I'm gonna take a look at the euro real fast, just while I'm talking about it. You have you had the inverse head and shoulders bottom here. We had the fake out right here, closed below the 18-day. Looked like it was going to roll over, but it didn't. Close right back above the 18-day, and then you got the squeeze above the 124 area, and you've been grinding higher. You went up to like 127. You haven't reached 128 yet, or actually, the target does measure to 129. The 100-day is 129.78. But you do have the histogram rolling over. a little here, so it's something to be concerned about. You also have a overbought stochastic with 93 readings on both. So yeah, potential lower high on the histogram, which means this move could be just a dead cat bounce. So other charts I was looking at, if you look at Bank of America, the hourly, you can clearly see here there's a rising wedge. You've been having a histogram ticking down for the last 2 sessions, and this stock still grinds higher on lower volume. MACD is flattening, and the red line's getting closer. You have a very overbought stochastic on the hourly with a 97, 96 rating. So basically, this, we're looking for this market to roll over. It's also at a key resistance area. Pulled it up on the daily here for Bank of America. As you see here, we may have popped above it. It depends where you draw the line there. But for argument's sake, I'll say we popped above it. Can we hold there again Monday? I think it's going to maybe go to 1520, close the gap, and then look for a reason to sell off. So as you see here, the volume is very pathetic. Friday's volume was very low, and we had another 25-cent melt up, 1.68%. You have the MACD with a potential positive divergence, but the volume does not confirm that there's going to be any sort of breakout. I mean, your MACD is still below 0, so you have to beware of the bears. Stochastics rising in the 53 and 40 reading, and basically I would look for a little more upside, possibly Monday. And if it closes that gap, I would definitely be a seller of this stock. Seller of the market. I think we're very, very close to a near-term high. Also going to look at a stock that I think is very, very big in the scheme of things. It's Apple. Great company, Apple. They're kicking butt. In their market, their products are obviously, seem to be the best. But what you have here in this chart is you have a lot of churning action, and you're right now it's having a hard time getting back above the 18-day moving average. As you see, it looks like Thursday's action, you tried to pop above there, and you sold off right down below. Friday, you were back up to 259.62, but you're below the 18-day. The 18 could cross down the 45 with a couple down days. I don't like this action. It looks like it's a potential complex head and shoulders formation forming here with a neckline around the 247 area. This breaks down, into the 200 area, and the market's going to obviously head into a tailspin, and you definitely want to be a seller of the market. Other charts to look at. Let's see here. I took out of all my longs. Actually, I'm pretty much fully short right now. I got in a little early. I didn't make as much on the bounce as I probably should have. Got to look at X. U.S. Steel has been. I was long this. I took out before. I took out I think on Wednesday on that up move. And it looks like we're touching the downtrend line right now. Is it going to have enough strength to go through that, or is it going to churn out here? That remains to be seen. Looks like commodity stocks are a little stronger than say the bank and the retail stocks, but the bank and the retail stocks make up most of the market and have most of the influence on the economy. So that would definitely be something to take a look at. And here you have SHLD. Looking at it's been very oversold. You still got 18 and 12 readings. Stochastic has been embedded for a while. This stock is absolutely tanked from 125 to 60, below 60 in a matter of 2 months. Just shows you how fast things could fall apart. All right, this is it for the videos, and have a good weekend. And I'll be trying to post more this week once I'm settled into my new place.